Hey, thanks for joining me today. So, everybody is talking about the 50-year mortgage. Trump says, I'm going to help with affordability. The other, people out in the world are saying, oh, a 50-year mortgage is bad or a 50-year mortgage is great. Let's talk about the real numbers to it. The rates that I'm using here are the ones that are published on Navy Federal Credit Union's website. So for right now, if you're a VA buyer and you go to lock in a 15-year mortgage, they're advertising that 5.00 would be the interest rate, right? Then for a 30-year loan, they're saying 5.625. So just for speculation and just for conversation purposes, let's all admit that you're not going to get a 50-year note for the same interest rate as you would expect to get on your 30-year note, because the same thing happens with a 15-year note, right? The shorter the term, the less risky you are as a borrower. So that's why the longer the term, the more risky the loan is, the higher the interest rate is going to be. So just for conversational purposes, not for quotes, for conversational purposes, I put together this: 5.00 for 15 years, 5.625 for 30 years, because those are posted on Navy Federal's website. I'm just taking the same 0.625 and adding it for a 50 year. So 6.25 for a 50 year. Now let's talk about if I'm going out and I like this property at $500,000, right? I don't really care about the payment. I just want to know what would the payments be for these three approaches, right? And first of all, when you go to get pre-approved for your purchase amount, your pre-approval amount is normally based on your debt to income, which is based on the monthly payment for the loan. For principal and interest only is the numbers that I pulled up, because taxes and insurance are going to be the same whether you get a 50-year, a 30-year, or a 15-year mortgage, right? So for principal and interest on a 15-year mortgage at 5.00, you would have to qualify for $3,953 a month. Just PI, just principal and interest for a $500,000 purchase. The same $500,000 purchase at a 30-year note with a higher interest rate of 5.625 would be $2,878 per month, right? So that's a big difference, $3,953 to $2,878. Now, if I add that same 0.625, we get to 6.25 for a 50-year note. So we go from $2,878 to $2,724. So what are we saving there? $154, right? $154 could be the difference of $20,000 to $30,000 to $40,000 in purchase price, right? And I go over that here in the next segment. So let's talk about the interest that you would pay over the term. If you do a 15-year note, 5.00 interest rate, $3,954 a month, $211,000 in interest paid over the life of that loan. The 30-year note with the $2,878 payment goes $536,000 is paid in interest. If you go to 50 years at 6.25, your payment goes down to $2,724, but your interest paid over the life of the loan is $1,135,000. That's incredible. That's a lot, right? So does it make sense to take a 50-year mortgage and pay the minimum payment for that 50 years all the way through? Probably not, right? So now let's go to where it would make sense. The only time it would make sense, in my opinion, is if you need to stretch and perform at a higher price because of the house that you absolutely adore, right? So let's talk about this. Let's say that you do your mortgage application and you say, hey, Mr. Loan Officer, Mr. or Mrs. Loan Officer, if I do a 15-year mortgage and I want my principal and interest part of the payment to be $4,000, how much could I pay for a house? They say $505. You say, okay, so then you go and you look for $505 and you don't find anything. You come back to them, okay, what about a 30-year mortgage at 5.625% at a $4,000 a month principal and interest payment? Well, now you're qualified to $695,000, right? So that's pretty cool, because now I can go buy a different level of a home. Instead of a condo, I can buy a townhouse, maybe instead of a townhouse, I can buy a detached home, right? Now, this is where the 50-year mortgage comes into play, because the 50-year mortgage at 6.25% for a $4,000 principal and interest per month payment would only go to 733. So the 30-year mortgage goes to 694. The 15-year mortgage 505. The 50-year mortgage 733. So you're only going from 695 to 734-ish, right? You're not unlocking a whole lot of buying power. So when would you actually use this 50-year mortgage? You would use this 50-year mortgage when you're approved to perform to the $700,000 mark or $695,000 mark, and you find a house and you put in your offer for $695,000, and the sellers come back and they say, hey, look, we really like you. We really like your terms. However, we got this other offer from this other buyer for $720,000. Is there any way that you can match or beat that? Well, then you go back to your loan officer and you say, hey, what's a 50-year mortgage? I love this house. I need this house, right? So then they say, okay, 734. So you're like, all right, cool. Let me go ahead and do the 50-year mortgage. I'll buy the house for the 720 so that they pick me instead of the other guy. So it's really a pick me product, right? And the kids these days they don't like pick me people, really, right? But it's a pick me product. It's there. It's waiting for you to need it. If you ever are in a competitive situation where everybody likes the same house and you're completely topped out, you can go ahead and do the 50-year mortgage and get yourself that extra $30,000, $40,000 of qualification, and that way you can purchase the house, right? Now, when would I do this? I would do this when I know for sure I'm going to make more money or I'm going to pay off my debts. So in doing one or both of those things, you're going to now increase your ability to refinance this property into a better loan product, right? So what would be really cool is if you went ahead and stretched using the 50-year mortgage to buy the house that you love, you move into it, you make it your home, you're paying off your debts, and you're earning more money, and then you call your loan officer and say, hey, can I refinance into the 30-year mortgage? And even better, can I refinance into the 15-year mortgage, right? So now I can get this property paid off in my lifetime, because I'm 44 years old. I am not interested in having the mortgage until I'm 94 years old, right? But that's just me. Maybe you're in a different scenario. Maybe you're 20 years old and holding that 50-year mortgage for a while makes sense because you're cash flowing the property. So what do you care, right? And there's more interest being paid. So there's more of a write-off there if you're living in it. There's a lot of reasons why you could use it, but none of those reasons are sound long-term investments. So what did this law really do? Did it make housing more affordable? Will it make housing more affordable? I do not believe that it will, because you're only going to save $150 a month. You're only unlocking another $30,000 or $40,000 in buying power at this level, this $4,000 a month level. So if you're in a situation where you're like, oh man, thank God they came out with this 50-year mortgage, now I can afford a home, I'm sorry to report that that's probably not going to take you from not being able to afford real estate into being able to afford real estate. So if we all get the choice to vote yes or no on allowing this 50-year mortgage, or we all vote with our money, consider using it or not, I would say use it as a strategic tool, but do not stay in that loan for too long. You will end up paying a lot of money, right? So that $4,000 a month, if you buy a $506,000 property, you're going to pay $214,000 of interest over the life of the loan. Same $4,000 a month on a 30-year mortgage for a $695,000 property, you're going to pay $745,000 in interest. Same $4,000 payment per month on a 50-year mortgage, 6.25% interest rate would be $734,000 of buying power, and you would end up paying $1.6 million in interest over the course of that loan. So I hope this helps. I hope this helps you conceptualize like what it could be used for, how could it apply to you in your life, where can you use it. But overall, this move, 50-year mortgage move, is not going to make real estate more affordable. Thanks for joining me today. I hope this helps. And if you ever want to book a meeting with me, just go to my website, DannyBarkerRealtor.com, and click on there, and we'll schedule a Zoom call, and you and I can strategize for you to make your next purchase. All right. See you guys.